It is the last day of 2023, and what a year it has been. We didn't have an FTX, but you know, FTX creditors are still being shafted. But that's another story. Let's talk about where we are in Bitcoin, because happy days. I see a lot of tweets at the moment that Bitcoin looks bearish. Okay, let's talk about this, because this is bullish sideways consolidation for me. If I put regular candles on and we look here on the weekly and we take everything else off, this is not bearish. This is sideways consolidation in a really strong uptrend where we got a little bit too far over the front of our skis, but it is not a bearish reversal. Now, shorter term, these are, I have to say, these weekly candles are not bullish yet. So to stay bullish, in other words, to continue to be trending higher, we should not have closed more than 50% back of this big up thrust candle. So instead what we've got is inside bars which are neutral whilst we do this wave 4. And as you know, I kind of think that we are in a way, we've got another potentially swing higher. Now, what would be pretty bearish? Well, I think if the ETF got announced and we made a marginal new high and a swing failure pattern, that would be, for me, more bearish. And I think it might, you know, we've only got, what, 10 days until the deadline. It's a week on Wednesday. So potentially, you know, it could come sooner rather than later. And how the market reacts then will tell us. I have to say, I see a lot of people talking about funds accumulating Bitcoin ahead of the ETF announcement. And honestly, that's nonsense. These are very regulated funds, right? They can only buy Bitcoin if people buy shares or in the ETF, investors. And if they sell it, they have to sell them, and they have to prove their holdings and show their holdings. So this idea that people have been accumulating, you know, these funds who are going to be running ETFs are accumulating Bitcoin ahead of it, I kind of just don't buy that. That's not how they work. It is really good because, you know, the US government have worked really hard for the last couple of years to cut investors off from cryptocurrency and Bitcoin. So it does enable US investors to get a chunk of Bitcoin without actually holding any. Let's hope that it encourages them to have some real ones, but it is good news, you know, for me, the best news about this ETF is going to be that it makes it less kind of shady and criminal if you can buy it in an ETF. So these weekly candles, we're still sideways in this really tough sideways range, awaiting the decision. For short-term trading, I have to say, be very careful. I don't think that the liquidity, you know, normally we can say on a Christian holiday like Christmas that Asian markets will still keep going, but kind of this year end is a little bit dodgy. So let's put regular candles on and look where we are on the hourly. We are kind of, flat moving averages, and we really kind of need to buy the dip. Now, if I measure from this first swing lower, as you know, I had it this way, from this high to low, and project it from here. This was the 61.8 level at 41,600, and we said if we got underneath it, we would drop down to the equal measured move level, which is down at 39,900, basically 40,000. So, you know, in between, I think if we can break above 44,000 and hold above it, we're bullish. If you trade the breakout from this channel, or if you're long and we break out from this channel, then a retest of these highs at 44,000, 44,500 is kind of really the target. And then holding above, yes, we see more upside, and then 50,000, maybe 54,000. But yeah, I just don't see very much liquidity, and so I see the best moves, you know, when most of the big funds and trading firms are closed on these holiday weekends and they don't have the access to the spot market that they used to have. I really do see the best opportunities on quiet weekends and holidays in altcoins. And at the moment, unfortunately, most of them seem to be doing a little bit of a year-end pullback. So having had this rally here, I think, you know, short term here, we can see as we go into the holiday end, a little bit of a rising channel. If we were to break down and break back down underneath these hourly moving averages again, we're going to look for a retest of 41,600 and potentially 40,000. If we can break above this swing high here at 43,140 and this hourly 200 moving average, we're going to look for a breakout from this declining channel potentially, and then a retest of the highs and 44,000. And here in the middle, I have to say, don't diddle in the middle. I really don't see a good setup either way. And it's pretty much the same if we look at ETH. If we look at ETH dollar and we look at ETH dollar on the weekly chart, again, this is not a bearish candlestick pattern. We're really just sideways consolidating, hopefully getting ready for some energy to break this 24,000 resistance level. And then if we do, our next upside target becomes 28.74 and potentially 30,000. ETH, much more than Bitcoin, likes kind of round numbers as well. So for now, I have to say I'm a little bit more bearish ETH, and the reason is that we've done that false breakout thing, double top swing failure pattern, which makes me kind of lean towards a retest of the bottom of the range. So we have a drop, bounce, correction, one more swing lower before we finish. Now, we are potentially sitting on support, and potentially short term we look a little bit bouncy, but if we say our decider is the hourly 200 moving average, here we are completely flat, just there's nothing. We kind of need to break out from this sideways range to tell us which way next. And whilst the bots are running the show, watch out for a false breakout in ETH. Okay, let's take a look at some requests, and I am going to start with some of these. In fact, let's start with SEI. Okay, now SEI is on a lovely bullish move, really strong, and until this says it's stopped going up, I wouldn't bet against it. Now, the problem with this is it's gone a little bit too far. I would say it's a little bit too stretched for a kind of new long positions, but if you're holding it, there's no reason to get out yet. Now, potentially this looks like very nice 5 waves up, and we are in the 5th wave, which means at some point when this finishes, we're going to see a bigger correction and potentially back to the bottom of this wave 4 in SEI. So we need to watch out carefully for a reversal. Also, if we look at this 5th wave that we are in, so normally when you have a big kind of 5 wave move like this, and I've kind of got it wrong here because that's it there. When you have a big 5 wave move like this, so 1, 2, 3, 4, 5, if we measure this 3rd wave, it was equal to this 1st wave. And so what we're seeing here is an extended wave 5. Now we got to the 1272, we got above the 1.618. Normally for me, that normally points to 2.618, which would be all the way up here at 0.79. Maybe a bit of a wobble at 0.65, but I'm looking at this level to level to level. However, I just want to make sure I've done this right. These levels, you know, when you get there, you either get resistance from them or they become support. And so I'm not 100% convinced of these working the way that they should. And so I'm going to say we keep riding this until the market says it stopped going up if you're holding it. So the last time we had a red Heikin Ashi was 2 weeks ago. Even in each of these corrections on the daily, we have not reversed yet. We just are a little bit oversold, so no reason to get out of long positions. We could very easily just keep going, but once we do, you know, for me, my favorite strategy is I wait till it pauses, I wait till it stops going up, get a red candle, I put my stop underneath it. If it keeps pulling back, I get out. Now, on these spikes, if you've got some, I really do think it's quite a good trade if you're holding this to maybe pay yourself some and keep some, because sometimes when you get to the final top, it can be quite a sharp reversal like this. So if you do that, you know, you kind of don't have that bigger drawdown. But the way this is going, especially, I would be looking for a shorter term topping pattern. Now, shorter term here on the 4 hour, yes, we've got a little bit of a double top swing failure pattern. You can see it more clearly on the hourly. And so if we break the low of this sideways range and hold underneath it, we are going to see maybe a bigger pullback. And when we do that, like we did here, double top, we pull back to this previous swing low. It was support and we kept going. So we can say if we get underneath 0.58, we're likely to pull back to around here, around 0.53 maybe. And then if we're going to keep going up, we're going to keep going. So depending on where you got in and what your plan is for this, if you're a long-term hodler in SCI, then you know, you're going to trade it differently to if you bought this breakout back here, you know, yesterday or not so long ago. So yes, this does mean a little bit of a pause as we head into the holiday tonight, but it doesn't mean a bearish reversal yet. Only kind of underneath 0.53 and then finding resistance there would we be setting up that bigger pullback. Let's take a look at AVAX. Now, big pullback here. Let's look at the weekly. For me, I put my fib retrace levels all the way from the high that we made in November 2021 to the low that we made in September this year, and I was looking for this 236 fib level to hold a support, and we've kind of got underneath it. And sometimes, you know, when you overshoot a level that you probably shouldn't have, you end up making a head and shoulders pattern. So we need to make sure that that's not what we end up getting here. So for example, I think that double bottom short term here at this previous swing low means that we're going to try a bounce. Now if we were to try a bounce here that just went back to these 4 hour moving averages and looked like this, and then we broke this, then potentially we are setting up a bigger pullback. That would be a topping pattern that I would be looking for. You could see it probably more clearly on the hourly, and that hourly 200 moving average would be it. But you know, quite often that doesn't work that way. Now if we were to break down, we would normally say, well, the target would be for the head and shoulders pattern would be twice from here, which would bring us back to 27.17. However, when head and shoulders pattern fail, it's normally because they're just an ABC correction, which would mean that we could just drop down to 31. Now, if we don't break this neckline, if we don't break these previous lows, you know, if we can hold 37, even if we draw it as a little bit of a sloping neckline, then I would not give up on this. It's in a, I'm not going to give up anyway, but yeah, I would draw it a little bit slopey like this potentially. So AVAX, potentially a bigger pullback, potentially this is just sideways consolidation. Now what would look bullish here and prove me wrong? Well, if we bounce from here, we get up to this 200 moving average, but our pullback means that we find support from this 236 fib again, which we have done before. It's been pretty good support and resistance. Then I would not be so bearish. I think potentially we would have more upside, and I would hang on in AVAX for more upside. I actually have got a little bit of AVAX. I haven't got out yet, mainly because we're holding this daily 20 moving average and we've pulled back to it, and I bought it all the way back down here. So if it holds this daily 20, for me, I'm going to keep riding it back underneath it, or a break underneath this neckline, and I am out of my position. Okay, let's take a look at BitSense or Tau. Now this one, remember what we said, we're always looking for a little bit of a topping pattern for a bigger pullback. If we say here in Tau that this is not the high and we haven't completed this whole swing from the lows in April, but this is just a wave 4 before another swing higher. If we take the most recent swing, the most common retrace is normally a 38.2 or 50%. And so here on the weekly, we are actually holding this 38.2 level at 261. If we look at it on the daily, it's where all our daily moving averages are, and we're kind of consolidating here. So for me, I think, you know, potentially, even if it's just we've gone 1, 2, 3, and we're going to go 1, 2, 3 up, we should potentially see a bigger bounce here. But clearly from underneath this 261 level and holding underneath it would point to more downside. It would point to 220, this previous swing low here, and potentially a much bigger pullback because we will have lost this daily 50 moving average. We potentially could see a bigger pullback, 786 retrace down to the 200-day moving average, because we are so overbought. So 261 is key support here, and I would not be surprised if it had to go at another swing higher if we can hold this support. And then, you know, the worry, what would say this is just a corrective bounce? Well, if we measure from the low on the Christmas day here, on the 25th, to this high, and we can only get to 334, and then we turn back again, that would just be kind of an ABC look, wouldn't it? When I'm not sure if we're going up or not, I'll take all these fibs off. I'm going to put my fibs on this big swing lower that we made from high to low. And I kind of go from level to level to level. And I have to say, this makes me feel a little bit more bearish, because this is like the 50%. It's clearer on the 50, on the 4 hour. It's the 50%, and normally if you do that, you hold the 50%, do another swing higher, and we haven't. We're kind of underneath it, and these 4 hour moving averages are pretty bearish. So yeah, not ruling it out, but I think that underneath 261, watch out for more downside. 220, 178, and potentially all the way back to 200 and the 200-day moving average in Tau. SUI, I think a lot of these coins are going to get hurt if there's a big move in Bitcoin. It will be like the old days, you know, when Bitcoin would suck all the liquidity from everything else. Now, SUI, like this one's such an interesting coin. Now, I'm going to put regular candles on, and we're going to measure this whole correction, because we are doing pretty well in the grind higher. We've flipped all of the daily moving averages, bullish cross. We did all the right things for more upside. We are in a bullish trend. We have pulled back to the 200-day moving average, and here we go higher. And for me, you know, this is just for now a correction. If we look at it on the weekly, quite a long tail on this candle, but not a bearish reversal yet. So just a pullback in an uptrend. Even if we were to measure in Fibonacci terms, if we put our fibs on from this low to high, we are still in an uptrend, because we're holding this 236 fib 0.79. Looks pretty good. If we take a look at this most recent swing that we're in from the daily 200 moving average, we're holding the 38.2 here at 0.784. So 0.784, 0.79, pretty nice support for more upside. So how are we going to know if we're going higher? Well, I think we already are, to be honest. So I don't see a reason to get out yet from SUI. There was a bit of a tough level in terms of support and resistance at this big spike high from January of this year, because this is this year highs. You know, this was the high for this year. And it couldn't quite, like, there was far too many people taking profit at this big level at 0.9. And so could we turn into a bigger pullback? Could it turn into a big kind of inverted head and shoulders bottoming pattern here in SUI? Potentially, yes. But for now, I think it looks pretty good. Now, let's look at it on a lower time frame, because corrections are normally 3 waves. And I think that this does kind of, if we're going to do like a bigger correction, even if we're just going sideways, having done this move down, this B leg will just be kind of an equal measured move like this, and then we'll do another swing lower potentially. So I'm not totally convinced we're going up yet. I would like to see what it looks like when, you know, everyone comes back after the new year, in 24 hours from now, you know, when it's all over, and potentially we could see some better momentum. So if you're a big longer holder of SUI, as long as we hold 0.79, 0.78, I think it looks really good. But if we do a 3-wave corrective bounce, there is a risk that we do another bigger pullback before we go higher. In terms of trend, though, all of these daily moving averages say this is a uptrending market and we should be buying pullbacks. Let's take a look at TRB, which is Telor. This one, gosh, the gift keeps giving in this one. But again, like a lot of coins that I look at, I have a little bit of a worry that this, I have to put it on logarithmic to show you, but I have a little bit of a concern that this also is in a bit of a fifth wave. So this could be a big wave 1, textbook 3-wave pullback, didn't make a new low here in June. And then here we are with a big 1, 2, 3, 4, and I think we're in a 5th wave. Now, normally when you do this, wave 1 and wave 5 have a little bit of a mathematical relationship. So if I measure this here like this and project it from here, I'd been looking at these level to level to level, see if the market was reacting, and it kind of was, but it's so extended. It's getting a little bit silly. So I feel like shorter term, on this shorter term swing we are in, we need to kind of keep riding the trend until it's over. And there isn't any sign of it yet. It's going to keep squeaking higher. You know, there are other ways I sometimes look for targets. So put my retracement fibs on this swing, and I look and see, I want to put the 1.618 in. If I do this here, let's tidy up. Did we get a reaction at this 1.618 level? Yes, we absolutely did. So I'm measuring from this high to low. Here, 1.618, big pullback to retest these highs. So the next target would be the 2.618 level at 197, that lovely round number 200. And let's put regular candles on. It was resistance, and we had a little bit of a pause and some profit taking above it, but now we've kept going higher. So for me, because we validated these fib levels, the next upside target for me is at 316, and then above that 507 based on this. So I don't think we've quite finished going up yet in BitSensor, but look how overbought we are on so many time frames. It's quite, if you're looking at new positions in this at this point, you know, you got to watch them very carefully, because we are getting very close to the end of a 5th wave and a little bit overbought. So 316 on the upside next. I think we're at 285 now, and you need to buy pullbacks. So that for me, look how buying each time we pull back to these hourly moving averages. Look what lovely moves we've got. And because of the New Year holiday, we might get a little bit of a sideways 3-wave bigger correction here, but then TRB I think has more upside to come. Let's take a look at Fetch. Look. So for me, on this, so we had a lovely buy entry here down here where we got a bullish cross of our weekly moving averages and broke out. And since then, you know, this has been a really nice buy pullback market. And for me, I had 2 targets in Fetch. The first one would be where this second swing was 61.8 of the first swing, and we blasted above it and it became support. And the second target is this 61.8 equal measured move zone. So that's where at 0.7124 we are equal to this first swing we've made, and a big 61.8 reversal level, and we're having a little bit of a stall here. Now, if we reverse here, unfortunately, it means this whole swing. If we were to drop back underneath 0.5, it would mean for me that this whole swing was corrective, and we're going to do a deep retrace here, probably 786, or even back to these swing lows. So if you're kind of really bullish fetch, you don't want to see it close and hold underneath 0.5, and that's quite a big correction. If we look at our golden ratio zone here, this is a 61.8 fib level. If we were to drop underneath this 50% level in the middle at 0.62, then I'm afraid 0.5 is where we come back to. But for now, you got to say that this is not a reversal candle. This is just a pause doji. Market's not sure which way next. So it's just one of those levels that we need to watch out for. And so a bit like Bitcoin, the key here is, if it's going to keep going up, is we need to close back above this fib level at 0.76. And then our next upside target, of course, is going to be the 786 and the 886 and so on. And we will invalidate that kind of equal measured move pattern. I'm being a little bit cautious here because potentially, we could argue, I don't think we've done 5 waves up, but we could have. So just watch out. Underneath 0.62, this is key trend support. This is the previous swing low, and it's that 50% pivot level. And potentially it might figure out a little bit lower. Sometimes it can be a bit messy. So I would say that I would be more bearish underneath this swing high here at 0.6. So I'm going to look for 0.62. I would say support, and potentially, a 3-wave correction back to there would be a really kind of good look here. That previous swing low would be quite bullish. Underneath 0.6, we are headed back to 0.5 in a bigger correction in fetch. So, yes. No reason to doubt this. And I think from here, we're likely to bounce. Look, we are back at the daily 20 moving average, which this market really likes. We've bounced from it regularly before. It's really good trend support. So I'm looking for a bounce here in fetch from the daily 20 moving average, but I'm only going to be bullish for more upside if we can break this double top level above 0.76. Okay. I want to thank you all for 2023, for being here, for watching, for listening. I'm really hoping that 2024 is a better year. Not just world peace, which would be amazing, but yeah, in the markets and good times for everyone. I really do think learning to trade can make you financially independent and change lives. But it's really hard to master, and the discipline and patience required is hard to master. It's one of the hardest easy things you can do. So good luck on your journey in 2024.